Welcome to TradeTheMBA.com. This is John. This report is for the 30th of March. Well, the market's not in bad shape. It's not great either. I mean, what you have is the cross of the steel over shorts here, which was short-term buyers keeping things elevated. Then you had mid-term buyers pop in, and now even long-term buyers almost above the negative 7.5 here, which would really give sustainability. I've added in here the MBI indicator just so you can see, because a couple little things of note. You know, when we get our red line here that dips below these the blue and green here, you typically have more of a sustained down run. Once it moves back above it, that's usually when you begin your uprun trends. In this particular case, we're above that. It's just you've got this point right here where we're about to meet here with the cyan and green, and you're going to need to see that green crossover to really push things forward, so to speak. Just want to show real quick, we edit the MBI in this case. All the inputs have just been changed to the colors of the lines, so it's just a matter of flipping them from 1 to 0, and when you load it, it will just start up with just the cyan and the green lines, the original, for now, and that makes it simple. From an NQ standpoint, still below the 50%. So again, it's one of those, you know, below the 50, you've got a little bit of problem, and it's kind of reflected itself in the NASDAQ. Not quite performing as well, though. You've got the exact same DOC readings, but you'll notice there's a slight difference here. One is many midterm buyers lifting into the NASDAQ, and that has created that separation where cyan still rides over. So a fade of short-term buyers could really lead to a bit more drawdown. And from a gold standpoint, came up, coming back, and you know, you get this dip below the red line right here, which would indicate the resurgence to the lows, and that's just because shorts have just continued to ride into this, just not projecting the inflation yet that would drive it. Though you still see a lot of movement into Bitcoin. If we want to pop that one up real quick, from that move in here to this is the adjusted Deocon paint, which will be part of the normal. You won't even notice it. It'll just be normal Deocon paint 2 for you, and eventually it will just become a single MBI paint bar, which will handle everything. But from the buy that took place down there, continue to really push, and you can see that's what I was talking about here, where you get either that white below the 10 level, which is that sustained up move, at the same time you have the red riding above the blue and green lines, and you can see where it dips below, you have that fade. When it comes back above, you rise. It's just that convenient. So you got Bitcoin up near its highs. I mean, it's interesting given the divergence between that and gold. So it just shows that the crypto is going to become the new inflationary target of hyper stimulus that doesn't look to end, and that's something that has to be weighed in. And these are those dynamics that you have to pay attention to with the market. Just like the situation with the euro, as the euro is compromised further back into a normal range, it will put more pressure on the S&P in that, because a lot of their earnings derive from that. Particularly if we get down into that 115 range, it would be very interesting at that particular point to see how that plays out. This is going to look very different from your charts for if you're running the Deocon paint. Get it onto a candle. You can actually see that we're running the 2A here. And what that does is when we had certain blue lines, we have our basic, like we were just talking about, configurations where we know that if we're below that green and blue, you're going to have that continued weakness. When it pops back above, that's when you start to get your up moves. But these orange little dots, they're part of just a program for short signaling, and so that's going to be incorporated with them. You can see where it more accurately it defines the top of those, that allows for the run. Still working with a few of the buy configurations, which as it took place would have been right about here, where we started to have steel rising after resetting towards the 0. A little hard to see that. Increase it just a little bit. When we get that situation where you have like a no steel reset, meaning it didn't dip all the way below red, but as long as it makes the zero and then you end up with the orange below red, you've got yourself the buy configuration, and took off nicely. Then you can see that matching corresponding where that red dips below gave a little bit of weakness, but it immediately turned around, and that led to the pop that took place that pretty much lasted the remainder of the day. Literally, it was just some small moves, and you can see where these orange are popping up. They're just slightly ahead of the magenta in a lot of cases, which, in my view, this is mostly about areas that are above the 50% mark, looking at it from a short standpoint, wanting to be close to where we had previous BK signals, which were DOC spreads, but DOC spreads that also match what we know to be more consistent setups that will fade more accurately, and so that's been the key with that. But as we came through and those true signals came in, that's currently where we're at right now, actually, within that configuration. You can see the red below. So is it critical, the understanding for some of these readings? No. Will I be going over them as time goes on? Absolutely. But what you're just going to see is them reflected in the paint, and that will just give those accurate setups so that you're able to stick with the trend of these moves. In fact, when we look at it from like the 50K, you can see the relevance of it. Here we're running that same 2A setup, but you can see the difference between what we're talking about here, where the red is below the blue, and as soon as it pops up is the buy, which is exactly where it took the buy. This was right around 38.60, and that went all the way to 39.37. So that's a significant number of points, just about 80 points almost on that run, just shy of it. So that's impressive. In fact, the lower entry on this one at 57 would be exactly at 80 points, 37.50. So not bad at all. But the relevance of this is it's going to be able to avoid this kind of setup and capture that turnaround, just to avoid any of those tiny little drawdowns. And that will make a huge difference in some of these programs. So that's very exciting news, and really terrific developments. And this is just about blending some of these DOC readings along with the Power Mode 2 all into a single configuration. And we'll make it as simple as possible. It really requires a lot less reliance on the cyan readings in that, which I think is fortunate, because some of those get a little erratic and can remain in these extreme conditions, but it's easier for us to recognize that from the white line staying below the 10 level, and that crossing point of the red indicating that weakness has come through there. So we'll explore more of those, and I'll certainly be updating them. You can look for indicator renewals, and we'll be all set to begin April, and you will have the updated version of the this paint, which will just be in the normal PNT 2, so you can look for that as well. As always, though, trade well. I'll be on the Skype chat putting up relevant charts. Trade well.